Good afternoon, everyone, or good morning, depending on where you're joining from, and welcome to our Q2 Equipment Watch webinar. I'm Josh Crowe, Senior Account Manager here at Equipment Watch, and I'll be your host today. And if you're responsible for setting rates, building bids, or managing fleet cost, you know that even small changes in the market can have a meaningful impact on your numbers. And while the market doesn't shift overnight, staying aligned with current reliable data is what helps ensure your decisions remain accurate and consistent over time. And that's exactly why we've brought in two experts who are close to the data and the trends shaping this market. Jordan Waldschmidt is our chief editor at Equipment World and spent 6 days at ConExpo tracking down stories to bring you all. And we also have Molly Mooney, our data analytics manager for Equipment Watch and expert among experts when it comes to understanding the data that fuels our cost recovery insights. Here's what you'll walk away with after this webinar. First, a clear picture of recent industry trends and events that will impact your cost environment. Second, key takeaways that connect ConExpo headlines to the practical implications for your team and workflows. Third, a better understanding of the Q2 Equipment Watch data changes that will impact your bids and pricing. And last, some tips and tricks for how to use Equipment Watch this quarter to get even more value out of your subscription. And before we move into today's content, let's talk about winning some free Carhartt gear. If you registered and joined the webinar today, you've automatically been registered to win a 3-pack of free Carhartt gear. If you stick around to the end of the webinar, I'll be announcing the winner live at around the 29-minute mark. Now I'd like to hand the presentation over to Jordan Waldschmidt, who will provide an industry update and curated look at what ConExpo had to offer this year. As I mentioned earlier, Jordan is the chief editor of Equipment World, our industry-leading publication that covers news for the heavy construction industry, and was our boots on the ground at ConExpo. With that, I'll hand it over to Jordan.
Thanks, Josh. I just got back from ConExpo, and if you've ever been, you know it's massive. Trying to track every product and tech launch can be overwhelming, and that's where my team comes in. We cut through the noise to surface what actually matters for budgeting, fleet planning, and pricing decisions over the next 6 to 12 months. Today, I'll walk you through 3 key signals covering what I saw and heard, why it matters, and what to watch or do next. Before we dive in, a quick note on how I filtered everything. ConExpo has thousands of storylines, but the signals that matter most aren't the one-off announcements. They show up repeatedly across booths and conversations. We focus on where companies are investing, what customers are asking, and what impacts near-term decisions on pricing, availability, and utilization. As you listen, keep 2 questions in mind. Where are your costs most exposed, and what decisions may need revisiting this quarter? All right, let's get started with the first signal. Across dozens of manufacturer conversations, one theme was consistent. OEMs are working hard to stay competitive with US buyers. We saw this play out in a few different ways. International OEMs emphasize their long US presence and plans to expand domestic production, a possible attempt to counter any Buy America mentality amid global trade disruptions. Meanwhile, US-based OEMs leaned into their local manufacturing and supply chains, positioning themselves as potentially more stable and insulated from tariff volatility. And speaking of tariffs, those came up in nearly every conversation, and they aren't just theoretical. They create real cost pressure, with some manufacturers indicating impacts reaching into the billions. So how do we think this will all shake out? Well, let's start with pricing. Availability has improved significantly since the post-COVID shortages, but tariffs are introducing a new variable. Many OEMs absorb these costs in 2025, but expect price increases in 2026. On the availability side, supply is better than in recent years, but it's being tightly managed. Dealers and OEMs are actively controlling inventory to avoid carrying costs. Looking at pricing structure, tariffs and raw material costs continue to put upward pressure on equipment pricing. This makes long-term equipment planning more complex, which increases the importance of utilization data. And then there's rental strategy. Over the past 5 years, rental demand has grown between 3 and 6% annually, and that trend is expected to continue. Large contractors are increasingly using rental to maintain capital flexibility and better match equipment assets with project demand. And one key stat, about half of rental purchase options are converting to ownership, making rental a pipeline for fleet expansion. Based on this signal, here are three practical moves for you. First, monitor equipment pricing and tariff developments closely, and review your utilization data to ensure your fleet is sized correctly. Second, evaluate whether rental could provide flexibility for certain project types, and compare rental versus ownership costs in upcoming bids. And third, build contingency into your budgets in case pricing pressure continues. The goal here isn't to overreact, it's simply to stay ahead of the changes and reduce surprises. The second signal was about technology, but not in the usual way. This year wasn't about flashy innovation, it was about making technology easier to use. We saw intuitive in-cab displays and controls, AI assistants to interpret machine data and streamline workflows, and systems designed to work in the background, not demand operator attention. The message from OEMs was clear. If tech isn't easy, operators won't use it. So R&D dollars are shifting towards accessibility, tools that can scale across entire fleets, not just highly trained power users. This lower barrier to entry is critically important as the skilled labor remains tight. So what might this look like in the market? From a pricing perspective, more features like grade control and operator assistance are becoming standard or bundled into tiered packages. When it comes to productivity and cost, connected machines enable better tracking, predictive maintenance, and reduced downtime. And from an overall data strategy perspective, more OEMs are enabling mixed fleet data sharing through third-party partners, creating opportunities, but also raising questions about data ownership. Contractors should also be careful about using AI-powered tools to interpret that data. One mistake extrapolated could be extremely costly. And from a rental standpoint, simplified technology makes advanced machines easier to deploy without extensive training, expanding rental use cases. Contractors who want to stay ahead should first audit how much of your current technology is actually being used by operators. Second, review upcoming equipment purchases with a focus on technology that eases operations rather than adds complexity. And third, invest in training that focuses on real workflows and productivity gains, and then track its success with telematics. The goal is not to adopt technology just because it exists. The goal is to use the tools that make operators more productive and machines easier to run. Our third signal could be best described as equipment becoming less flashy and more practical. Compared to previous years, there was less focus on futuristic prototypes and more emphasis on machines that solve real job site problems today. We saw fewer electric and hybrid product launches and more flexible fuel solutions, including ethanol-powered machines, and continued growth in compact equipment capable of high-powered attachments. We also saw major investments in operator experience, treating the cab more like a cockpit than a simple control station. So what does this mean for you? From a pricing perspective, these incremental technology improvements may limit major price jumps tied to new tech, especially since electric machines can cost 2 to 3 times more than their ICE options today. From an availability standpoint, continued investment in compact equipment means these machines are becoming more capable of handling a wider range of job site tasks. And that versatility can help contractors reduce fleet complexity and control operating costs, particularly when fuel prices are volatile. And from a rental perspective, the versatility of compact equipment is likely to continue driving strong rental demand. As for next steps, first, review your fleet and identify where compact equipment could replace or supplement larger machines. Next, evaluate your attachment strategies that allow machines to perform multiple job site tasks. And third, continue monitoring development in alternative fuels and electrification, but focus near-term purchase decisions on machines that deliver immediate operational value. The broader takeaway is that the industry is focusing on practical improvements that help fleets operate more efficiently right now. So if I had to summarize ConExpo in one sentence, it would be this. The industry is shifting from disruption mode to practicality, focusing on pricing realities, simpler technologies, and equipment that delivers immediate value on today's job sites. Again, the three things we touched on were OEMs are competing harder for US buyers, technology is becoming simpler and easier to use, and equipment is becoming more practical and job site focused. The big thing to watch next is how these pressures show up in the data, especially around pricing, fleet utilization, and rental demand over the next year. Now I'm going to hand it over to Molly Mooney. Molly is the manager of data analytics, and she spends most of her day gathering, cleaning, and validating the detailed information that powers Equipment Watch. If anyone can give you the real story behind how the numbers are changing, Molly is the person for the job. Molly, it's all yours.
Thanks, Jordan. Good afternoon, everybody. My team and I have been working behind the scenes to make Equipment Watch data as accurate as possible, and I'm excited to walk you through a preview of what's coming in our Q2 cost recovery update. Just to ground us all in the data I'm about to walk through, my team recalculates cost recovery rates each quarter with updated economic factors, pricing, and cost factor improvements. For context, our cost recovery tool, the Rental Rate Blue Book, is designed to provide a neutral third-party hourly rate for equipment reimbursement. It combines ownership costs such as depreciation and major overhauls with operating costs like fuel and field repairs to ensure our customers have a legally and contractually defensible rate for their projects. Also, an important note for today, this is the first time we're giving you visibility of cost recovery data ahead of the official release, which means that you won't see the impact of the changes I'm going to talk about inside Equipment Watch until the official go-live date. To start us off, let's talk gas prices. In Q2, we're seeing significant movement in fuel costs. Diesel and gasoline have significantly increased since the previous quarter, and electric costs have increased slightly for Q2. With large changes like this, you should expect hourly fuel and total operating costs in Equipment Watch to increase accordingly. We're also working on adding several new models this quarter, including some wheel-mounted handlers, compact track loaders, and other various models. A lot of these additions come directly from your requests. Every single model mentioned here may not make it into our Q2 update, but our goal is to ensure frequently requested models are well represented. Those were the new models we added to Equipment Watch. Let's talk about some of the models that are being removed for Q2. In the January webinar a few months back, we announced that we hid light-duty trucks that were discontinued at least 40 years ago. We have expanded this to include all equipment models that were discontinued more than 30 years ago. This decision is in large part due to the fact that we don't support values for any models of any equipment 30 years and older. However, we'll still retain the historical data in our back-end systems, so you can reach out if you need data on older equipment, but we want to keep the live system clean and current. Next, we continue to make careful adjustments to economic life and annual use hours. We will be increasing economic life hours for vacuum trucks, crawler-mounted chain trenchers, wheel-mounted chain trenchers, and portable rotary screw air compressors. In addition, for 3 of the 4 equipment types I just mentioned, we will also be increasing their annual use hours. In terms of how these changes impact you, when either of these metrics increase, it will cause the per-hour cost recovery rates to decrease. We continue to review overhaul and field repair labor hours as well. In Q2, we'll be increasing overhaul labor hours for crawler-mounted hydraulic excavators. This change corrects for a previous rate drop and brings metrics back in line with customer feedback and our ongoing research. Now, the biggest change this quarter and the one most likely to impact your rates is our ongoing taxonomy improvements. We're expanding size classes for wheeled tractors so we can better align models with their true cost profiles. We're also updating tractor loader backhoes to use horsepower instead of digging depth to determine their size class. As a general rule for these kinds of updates, anytime a model moves into a more precise size class, you might see a more noticeable rate change. And while some rates may move, the overall impact should remain moderate because the corrections bring us closer to how these machines are actually used and priced in the market. To wrap it up, I covered a lot of individual factors today, but hopefully you now have a better idea of how the Q2 changes will impact your equipment types. Just as a reminder, all of the information I shared today is only a preview of the official launch, which we expect will be sent out on April 1st. If you have any additional questions about how these rate changes impact your work, please reach out to your account managers. With that, let me hand it back over to Josh for our tips and tricks segment.
Awesome. Thank you very much, Molly. Before I jump into tips and tricks, I'd like to provide a bit more context on my role and my team. The team that I work on at Equipment Watch, the account management team, focuses on supporting our clients throughout the year, ensuring that they receive as much value as they can out of their Equipment Watch accounts. We regularly hold onboarding sessions for new clients, ongoing training sessions for existing clients or new users, and answer many questions on the fly via phone calls, email, and even impromptu screen share sessions throughout the day. Many of you may already know this, but just in case you didn't, each and every one of our clients is assigned a dedicated account manager, largely based on geographic territories or customer segments. So there is a good chance that many of you may have seen or heard from one or more of these people listed on the screen over the years. The information we'll be presenting in the tips and tricks segments of this webinar series are also things that your dedicated account managers would be happy to review with you in a one-on-one training session if you ever need to. And last thing before our tips and tricks section, that Carhartt giveaway that I mentioned earlier will happen at the end of the webinar after our Q&A segment. So as we heard from Molly today about the upcoming rental rate Blue Book cost recovery Q2 updates, we wanted this first tips and tricks segment to focus on something that may be basic for some of you, but something that will be very time-saving for anyone who isn't aware. Something that is especially useful at the beginning of a new quarter, and that is pulling group rate reports with any required adjustments, specifically rate effective dates. So to pull a group report, you would hover over the asset management menu at the top of your screen, then click reports in the drop-down menu. Step one in this process is to select the type of report that you want. For this example, we'll pick the most commonly used report type, which is the Rental Rate Blue Book O&O Rates Report, which stands for Ownership and Operating Rates. Each of our datasets has a dedicated report type with features and adjustments that apply to that particular dataset or that particular type of data. So we highly recommend that you spend some time exploring these other different reports as well. The second step would be to pick the group of equipment you'd like to run for the group rate report. And then on the following page, you'll see all of the equipment listed that is contained within that group, and you'll have the option to select which machines you want to include in the group rate report using the checkbox on the left side of the screen. And if you want to include all the equipment in the group, you can simply leave all the checkboxes blank and then click the Generate Report button in the top right corner. We have now reached the final export page for our group rate report. And the different export buttons, export format buttons are located in the top right corner of your screen. The first PDF button allows you to pull a detailed report of the group. This would be the format of rate sheets that you would most likely be the most familiar with, the full page backup for each machine, all put into one file. So if you have a group of 25 machines, then it would be a 25-page document of the full cost recovery sheets. The second PDF button allows you to pull a more condensed report where the basic rate information of 10 to 15 pieces of equipment can fit onto a single page as line items. Both of these can be downloaded in portrait or landscape mode, depending on your preference. The CSV output can be especially handy if you would like to import these rates into your estimating software or to some other platform. While the seemingly simple act of pulling rates for an entire group of equipment at once is cool on its own, the section I've highlighted in the green box here is where the group rate reports, I believe, really shines. Each report type will have a different series of fields in this section that are most relevant to that data type. For this rental rate Blue Book rate, you have the option of adjusting the entire group to a particular DOT, regional adjustment, or you guessed it, the rate effective date. So in light of the cost recovery updates that Molly shared with you previously, In a couple of weeks at the start of Q2, you can go into your Equipment Watch account, pull your updated Q2 rates, and even make comparisons on previous quarters if you wish, all with just a few clicks. And in case you ever need to review the process of adding equipment to your saved models and groups, I'd encourage you to click on the Help button at the top of your screen, which will take you to our product guides page. This page has a handful of useful how-to videos and articles, including videos specifically on searching for equipment, adding equipment to your saved models and groups, making basic adjustments in the rental rate blue book, and much more. But as I mentioned earlier, the account management team is here to assist you with anything you need, so feel free to reach out anytime. And now on to Q&A. So we've had some people in the background compiling. Let me see what we've got. How do we? So this one, I can answer this one. How do we get reports added to our subscription? So reports are included in your subscription. Depending on the package that you have, which data sets you have, are going to depend on which of the reports are available. I would highly encourage everyone, if you've never explored them before, to go through all of them. You never know how they could end up impacting your workflow, to be able to pull group rate reports of a lot of your equipment or in categories all at once. So, and this next question, let's see. I tried to run this report and some models are listed as no data, quote, no data available. How do I get a rate? Okay. If you are pulling a group rate report and some of the models that are included say something like no data available, it just means that there's none of that particular data set available for that particular model. So we have a handful of different teams who are working on different data sets. They could be collecting retail rental data, aggregating resale and auction data for our values. Molly's team is calculating cost recovery updates, rental rate blue book, internal charge rates. Not all of the teams may have completed all of the data sets for that particular model. So it just means that particular model, you'll need to go out and find a different model in Equipment Watch to represent a different rate to represent your equipment. Let's see what else we have. Okay, when we submit a custom rate request, why can't it be added to my group or fleet in my account? It can be. You will always want to keep that PDF sheet that we give you as a custom rate sheet. That's the official Equipment Watch produced backup sheet. However, if you want to load it into your account so you can include it in group rate reports, when you go to your saved models page, there will be a blue button that says custom. So go to your all saved models page, scroll down past the fleet dashboard, find the custom button, and you'll be inputting the basic information like your make and model and year and such. And then you'll be putting in the monthly ownership cost and the hourly operating cost that we provide you on the custom rate backup sheet. So save models page, blue custom button, put in the basic information, put in the monthly ownership and the hourly operating. Let's see. This one would be for Molly. Okay. Can you explain why rates would go down if economic life hours and annual use hours go up? Yeah, Molly, can you answer that?
Yes, yeah, I can take this one, Josh. It's a great question, and we get that fairly often. So I do have something prepared on this. Rental rate blue book rates consist of both ownership and operating costs. When we calculate ownership costs, we're looking at the total cost of the ownership over the lifetime of the equipment, and then we're dividing that by its expected lifespan. So the longer a piece of equipment is in operation, the lower the hourly ownership costs. When we're calculating operating costs, we're looking at the total annual operating costs and dividing it by the annual use hours to get the hourly rate. So higher usage means lower rates. In summary, well-utilized equipment means lower costs. Underutilized equipment means higher costs.
Okay. That makes sense. Might have time for one more. How do you get, okay, this is good for anyone who isn't aware of our custom rate process. How do you get accurate pricing on equipment and trucks that are not on the site? Uh, we have a custom rate request process for Blue Book rates. You would simply click on the box with your initials in the top right corner of your screen. Click that, there'll be a drop-down menu. Custom rate order form is at the bottom. It'll open up a new tab in your browser. Fill that information out. Everything that's required is marked with an asterisk. And if you can get that submitted by 5 p.m. on any given Wednesday, we can typically turn that around to you by the following Monday, 3 business days later. So we have a weekly cutoff of Wednesdays at 5 p.m. Click on the box with your initials in the top right, custom rate order form. We can get you a Blue Book rate. Okay, I think we're going to need to, just watching the time, we're going to move forward. So the last question for the day is actually the most popular question we get in every single webinar, which is, can we get access to a recording of the video and the presentation slides? The answer is yes. You will receive an email after the webinar that contains a link to the webinar video and slides along with other helpful information. And if you're a current Equipment Watch client and want to set up a call to discuss anything we've talked about today, please reach out to your account manager and we will be happy to help. Probably just search your inbox for Equipment Watch and you will probably find a message from your account manager. And if you're new to Equipment Watch and want to set up some time to see if Equipment Watch is right for you, please visit our Equipment Watch homepage and click on the demo request in the top right-hand corner. And if you're looking for information on any of the other products and services that Fusable as a whole has to offer, you can visit fusable.com. And if you stop by, please sure to check out our new resources hub in the top menu for access to webinar recordings and all kinds of product collateral. And now for the moment you have all been waiting for, the winner of the free Carhartt gear. So let me check the chat. Okay. Congratulations is in order to Hugh B. from Ohio. So congratulations, Hugh. Our team will reach out to you after the webinar to work through the logistics so we can get you your gift bag sent out as soon as possible. And last but very much not least, we'd like to ask you to fill out a short survey to let us know what you think about today's webinar. You should see the survey pop up on your screen in just a few seconds, and we will use the insights from this survey to improve the future webinars we have on the calendar. That's it for today. So from all of us here at Fusable, thank you for spending time with us, and we look forward to talking to you very soon.